This video is brought to you by Henko Trade, a true ECN broker. Open an account today and trade one of the lowest commissions in the industry. With Henko Trade, you can trade Forex, cryptocurrency, indices, and commodities. Great thing about this platform is that they offer fast withdrawals, excellent customer service, and they even offer a 100% bonus. This means if you deposit $500, they'll give you a bonus of additional $500 that will be credited to your trading account. Okay, the minimum you can do this for is $100 and the maximum is $25,000. Be sure to sign up with Henko Trade today. Link will be in the description below. Where we specialize in teaching you how to grow small accounts. But in this video, guys, I'm going to teach you how to find your daily directional bias to make sure you're trading on the right side of the market. So I'm going to give you a step-by-step approach. Okay. So the key to understanding your daily directional bias is to understand where you are in the market. Okay. If you don't understand where you are in the market, guys, you're going to continually be on the wrong side of the market, and you're going to continually lose and not be a consistently profitable trader. All right. So there's a couple terms that I want you guys to understand. I want you guys to understand market structure. I want you guys to understand break of structure. I want you guys to understand the overall trend, okay, which is the higher time frame trend, and also the current trend, which is a lower time frame trend. Okay. So in order to be on the right side of the market, guys, the key is to trade in the direction of the higher time frame. Now, if you're not new to trading, you know that the market never moves in a straight line. Okay. We always have an impulse. Okay. A correction, another impulse, another correction, another impulse, another correction, right? And the price continues to do that until we have what we call a break of structure. Okay. So since knowing that we have an impulse, correction, pullback, retracement, whatever you want to call it, same exact thing, we have to understand market structure. Okay. So market structure is simply the ability to look at the chart and determine whether we're in a downtrend, uptrend, or if we are moving sideways. So the basic terms for market structure are if price is creating higher lows and higher highs, that means we're moving up. If price is moving in a downtrend, that means we're creating lower lows and lower highs. So we're on a daily time frame and we're using Euro USD. Okay. So let's go ahead and draw out our market structure. Simply, we're going to use this high right here. Okay. Price created a high. All right. And now it created a low. All right. So this will be our swing high. This will be our swing low. All right. This swing high right here, okay, broke this low. All right. So this is what we call a break of structure. All right. This break of structure right there, creating a new lower low. Okay. Now price has created a lower high, which we have right here. Now we also have a lower low. Okay. Then we also have a lower high, and we have a lower low. So now what we're looking for on Euro USD on a daily time frame is for price to create a what? Lower high. That's correct. Once price creates a lower high, what that means is we can look for an opportunity to trade with the trend or trade in a direction of the higher time frame. All right. So the overall trend, which is our higher time frame trend, the overall trend is that we are bearish. Okay. We can see that by looking at the chart. Sometimes it's not all the way clear. We can also use a trend line that gives us our direction. Okay. And we can also use, what I like to use, our 50 moving average. Okay. So we can see price is below the 50 moving average. That means we are in a downtrend. If price was above the 50 moving average, that means we would be in an uptrend. All right. And we will look for opportunities to buy. All right. So let me go ahead and take off that 50 moving average. All right. So this is our basic structure. All right. Now, the key to knowing where you are in the market is to draw out a trading range. All right. So to draw out your trading range, you want to draw out the swing high to the swing low, the most recent swing high to the swing low. All right. So we're going to use this right here. We're going to use this swing high, and we're going to use also this swing low right there. Okay. Next, we want to take our Fibonacci tool. Okay. And we want to go from the swing high to the swing low. All right. And all we're doing is simply drawing the 50% area right there. Okay. So this is going to be our bearish trading range. Okay. This is going to be our bearish trading range. This, from this swing high to the swing low, is our bearish trading range. And all that simply means is that our expectation, since we're moving in a downtrend, our expectation is eventually this low to be broken. Okay. And to create a new lower low. All right. So obviously right now we're not looking to sell Euro USD. Why? Because if we look at the most recent price action, we can see the price action is bullish. Okay. The most recent price action is bullish. So this will be our current trend. We have our overall trend on the higher time frame, the daily time frame, but our current trend is bullish. And we can see that clearly if we go down one time frame to a 4-hour time frame, we can see that the current price action on the 4-hour time frame is bullish. And why can I say that? Well, for one, we had a break of structure, and we also have what we have a low, we have a high, and now we have a lower high, and we're looking for price to create a higher high. Okay, that's why we can say that. All right, so let's go back to our daily time frame and finish up our trading range. Okay. All right, so this is our trading range from that swing high to the swing low. So way I teach it is I'm only looking to sell when price gets into my sell zone. So this will be my sell zone. Okay. So this will be our bearish trading range. Again, if we're following market structure, we're looking for price to create a lower high somewhere in our sell zone. And then we will be trading with the trend. Okay. In the direction of the daily time frame. You got it? So the next step to this is to draw our supply and demand zones. Okay, so we can see we have a demand zone right here. And in my trading course, I teach you where to find your supply and demand zones. We also have a, well, let's draw our supply and demand zone. So we have a what I like to call our minor and major supply and demand zones. Okay, this right here will be our major demand zone. This also will be our major supply zone. Anywhere in between the major supply and demand zones will be a minor supply and demand zone. Okay, so we have a minor supply zone here, and we also have one right here. Okay, so again, I'm not looking to sell Euro USD until it gets into my sell zone. Okay, once it gets into the sell zone, guys, then I'll be looking for an opportunity to sell the Euro USD. But until then, I am not looking to sell the Euro USD. If you wanted to, you can get in on this counter trend trade. Okay, so all you would have to do is go down to the 4-hour time frame. Okay, go down to the 4-hour time frame, and what you would do, since price is moving in an upward direction, all right, we already had a break of structure right here, and another break of structure here. So it lets us know that price is moving in an upward direction. I would take my Fibonacci tool, go from the low to the high, right? Next thing I would do, I would wait for price. Price could retrace and come back down to our golden zone here. That's where I'll be looking to take a trade in. All right, but if it didn't, then I would just have to wait for price to break this high, pull back, and then we can get in for a trade here. Okay, but if price decided to come down here, which most likely it can, I do not know. This is not Monday, so we'll see. But price action, I will look for price to get down to this zone, my golden zone, and then take it all the way up to my sell zone. And then I will be looking to sell the Euro USD. Okay, so that's how you find your daily directional bias. Okay, it's by using market structure, your current trend, your higher time frame trend, which is the daily, and then your current trend. I'm sorry, the overall trend is the daily time frame, the higher time frame trend, and your current trend is a lower time frame trend. Okay, which is the 4-hour. Also, if we want to even go down to the 1 hour, you could definitely see the current the trend on the 4-hour and 1 hour, which is still bullish. Okay, we're still very bullish on this pair. Okay, so I hope you guys understood and understand how to find your daily directional bias. You want to make sure you go to the daily time frame, draw out your market structure. Okay, draw out your trading range. Okay, and all we're going to simply do, guys, is you got to understand where you are in the market. Are you trading with the trend, or are you trading the pullback and waiting for price to get into your zone before you start trading with the higher time frame trend? All right, so make sure you like, comment below, join our free Telegram group, guys. You can also find our free course in there on how to trade the market. All right, I don't really use what we call strategies, guys. It's just a skill. Okay, there's only 2 ways to trade. Either you're trading continuation, or you're trading a reversal. Okay, so continuation is simply waiting for price to get to an area like the sell zone here and continue in the trend of the daily time frame, the higher time frame. It's just that simple. Or we're trading a reversal. All right, so if you want to learn more, make sure you check out more videos I got coming. And thank you for watching, and I'll catch you guys in the next video. Peace.